Thank you, Joe. Just very briefly, I'm sure everybody's aware of why we're going through this exercise. Why tax reform? And I'll just spend a very brief minute on that. Looking on the business side at corporations, we have a high statutory corporate tax rate of 35%. Now, the code is filled with many special provisions and preferences. Focusing on the business side, on the corporate side, I would describe our corporate tax system as lumpy. That is to say, there are some corporations that will pay tax, federal tax, at the high 35% rate. Others enjoy the various provisions and preferences and pay an effective rate that's much lower. So we have a lumpy corporate tax system. And of course, we have a double tax system. For years and years, there's been discussion of integrating our corporate tax system. That is to say, a corporation pays tax on its earnings, and then when those earnings are distributed to shareholders, there's a second level of tax. So the corporate tax is viewed as a very inefficient tax. In addition, focusing on our business tax system, our international tax system is a deferral system. And so the way it works is if you have a U.S. corporation that owns a controlled foreign corporation, the controlled foreign corporation earns active earnings in France. Those active earnings are subject to French tax, but they're not subject to U.S. tax until they're brought back to the United States. So we have what's called a deferral system. It results in a lockout. Enjoy the various provisions and preferences and pay an effective rate that's much lower. So we have a lumpy corporate tax system. And of course, we have a double tax system. For years and years, there's been discussion of integrating our corporate tax system. That is to say, a corporation pays tax on its earnings, and then when those earnings are distributed to shareholders, there's a second level of tax. So the corporate tax is viewed as a very inefficient tax. In addition, focusing on our business tax system, our international tax system is a deferral system. And so the way it works is if you have a U.S. corporation that owns a controlled foreign corporation, the controlled foreign corporation earns active earnings in France. Those active earnings are subject to French tax, but they're not subject to U.S. tax until they're brought back to the United States. So we have what's called a deferral system. It results in a lockout effect because if you earn money offshore, particularly in a low-tax jurisdiction, you don't have an incentive to bring it back to the United States and have it taxed when it's brought back at the U.S. tax rate. So we have an international deferral system that encourages companies to earn money offshore in low-tax jurisdictions, low tax compared to our 35% rate, and then encourages U.S. companies that have foreign operations and foreign subsidiaries to leave the money offshore. And as everyone knows, there's more than $2 trillion sitting in foreign subsidiaries of U.S. companies. In addition, under our current system, there are incentives to use debt because interest deductions reduce U.S. tax. Of course, our system is very complex. So for all those reasons, there's been discussion about tax reform. And another aspect of tax reform is there's a desire to promote economic growth. There are certain changes that could be made to the tax code that economists believe will promote economic growth. One of those principal ways to do that is to encourage capital investment. And you might encourage capital investment by having expensing, which is writing off all investments when they are made. Our current system is a depreciation system. It allows recovery of costs for capital investment over a period of years. Economists believe that if you move to expensing, that is to say an immediate write-off, it'll encourage capital investment, which is very important to growth. In addition, another aspect of promoting economic growth is lower tax rates on individuals. Consumption is a very important driver in our economy, and if you lower tax rates, it encourages economic behavior, particularly consumption. And so tax reform can contribute to economic growth, both from expensing and from lower tax rates. Now, in terms of some of the open issues that need to be addressed, first, just as a point, the discussion of tax reform has been going on now for more than a decade. We can look back at least 10 years to see the discussion of tax reform. In 2005, President Bush commissioned a panel to study tax reform, and the 2005 study gave two proposals. One proposal was a simplified income tax. The other proposal was a growth and investment tax called the GIT. and which looks a lot like the blueprint. That is to say, if you look at the blueprint, you can see a lot of aspects of the blueprint that are reflected in the 2005 Bush Commission report. So in addition to all the discussion that's happened, including the 2005 Commission, in addition, there's Congressman Ryan, Chairman Ryan, issued a bill, the Tax Reform Act of 2014, H.R. 1, which was a comprehensive tax reform plan. We also have the House Blueprint, which was released last year, which is a framework for tax reform from the House Republicans. And of course, recently, at the end of April, we received the administration two-page proposal for tax reform. So in terms of where we stand, these are the foundation, these are the building blocks for moving forward on tax reform. There are a number of outstanding issues that need to be resolved if we are going to accomplish tax reform. And I'm briefly going to go through them, and hopefully they'll be the basis for further discussion. The first question is a question of process. Is it going to be bipartisan? If not, there are special procedures, as you know, that will be used to move forward on tax reform called the reconciliation process. As of this time, most observers believe that it's not likely to be a bipartisan process, in particular because Democrats would not be in favor of lowering individual tax rates on high-income earners. And therefore, there is a basic issue with respect to lowering tax rates on the individual side that would probably be an impediment to Democrats going along with tax reform. But we will have to wait and see how this moves forward. It's too early to tell whether or not that will in fact be the case, but that certainly appears to be an issue. If it's not going to be a bipartisan process, then in the Senate, there is the possibility of a filibuster, which means that you would have to get 60 votes in the Senate to overcome a filibuster in the Senate. As you know, the Senate is relatively evenly divided. So in order to overcome the filibuster, you would have to use the reconciliation process in the Senate to enable passage of tax reform in the Senate with only 51 votes, or 50-50 with Vice President Pence voting on the Republican side. But the reconciliation process comes along with it various protections for the minority. And there are various limitations on the budget reconciliation process. One of the main ones is that under a budget reconciliation bill, it can't increase the deficit after the budget window. So if the budget window is 10 years, then under budget reconciliation, a tax bill cannot lose revenue after 10 years. So the first question is a question of process, whether this will be bipartisan or whether we use the reconciliation process. The second issue is the interaction with the health care bill. Interaction with the health care bill at least on two levels. First is the question of timing. As everyone knows, the health care bill passed the House recently by a closed vote, and now the health care bill is in the Senate, being considered in the Senate. As a question of timing, how quickly will the Senate address health care? As everybody knows, there are various different groups in the Senate, both Democrat and Republican, that have various interests in the health care bill. For example, there are Republicans, for example, that are very interested in the issue about Medicaid expansion. And so how will that play out in the Senate, and when will that play out in the Senate? But clearly the deliberations in the Senate with respect to the health care bill are going to have an impact with respect to tax reform, because of all the activity in the Senate will take energy and time away from moving forward with tax reform. And I'll talk more about timing a little bit later. In addition, the interaction with the health care bill, because as you know, there are various provisions, tax provisions, that were enacted as part of the Health Care Act in 2010. For example, one of those provisions was the 3.8% tax on investment income. And the question is whether or not that might be repealed as part of the health care process. Now, the original health care bill that didn't come to a vote would have repealed the 3.8% tax. But whether or not the provisions in the health care bill, the tax provisions in the health care bill, get separately acted upon in the health care bill will affect the tax bill, and for example, will also affect the baseline for the tax bill. For example, if the 3.8% tax is not repealed in health care and Congress decides they want to repeal it in the tax reform bill, well, that is an additional expenditure of billions of dollars that might have to be offset. The next, which leads inevitably to the next question, is will the tax reform bill be revenue neutral? As you know, in the House of Representatives, Chairman Brady and Leader Ryan have talked in the past about having a revenue neutral bill. Well, one of the questions is, well, what do we mean by revenue neutrality? How do you define the baseline? And we can have a whole discussion about how you measure the baseline, but just in interest of time, we're not going to go through. But the notion of a baseline is not a clear and certain thing. Also, the method of scoring. How would you go about scoring a tax reform bill? Would you use traditional scoring, or would you use dynamic scoring that takes into account more of the feedback effects of a tax reform bill on the larger economy? And then over what period would you measure revenue neutrality? And then a very important issue that's going to have to be addressed is distributional neutrality. The question is, how is tax reform going to affect the tax payments by various quintiles of earners in the United States? Distributional neutrality is going to be extremely important. Now, it's too early to tell from the information that we have about what might be in tax reform, but distributional neutrality is going to be a very important issue that would be part of the debate. Another question is, assuming we have tax reform, how much can rates be lowered? How much can individual tax rates actually be lowered? How much can the corporate tax rate be lowered? There are some who say, well, if you don't lower the corporate tax rate significantly enough, for example, below 25%, it might not be valuable to do corporate tax reform. We have to view tax reform in the lens of considering all the other countries in the world that are lowering their corporate tax rate. And the question is, in order to be competitive, how low can we lower our tax rates, both individual and corporate? The next issue is what deductions and preferences would be eliminated. Joe referred to some of the preferences and deductions that might be eliminated. And of course, I think we'll spend some time talking about the proposal in the blueprint for expensing, and we'll talk about the denial of interest deductions, because they are bookends, and we will discuss expensing and denial of interest deductions. There was discussion in the past of perhaps a transition tax on accumulated offshore earnings to pay for infrastructure. That is to say, of the $2 trillion sitting offshore, one of the proposals is to have mandatory repatriation, to treat it as if it was repatriated to the United States, and that a certain tax rate, perhaps between 8 and 10%, would be imposed on accumulated foreign earnings. The question is whether it might help pay for infrastructure. There were discussions about a year ago between Democrats and Republicans of trying to move forward with some sort of tax reform where the notion of a transition tax to pay for infrastructure was discussed. At the present time, it doesn't seem to be on the table, but of course it could always come back in order to bring Democrats to the table. Two of the most important issues I'll now discuss is what type of international system would we have. Now, it appears that a consensus is forming among Republicans that we would have a territorial tax system. And under a territorial tax system is if you have a foreign subsidiary and it earns income, it would pay the local tax, but when the income is repatriated to the United States, it would not be subject to U.S. tax. It appears that the Republicans are agreeing that we should move to a territorial tax system, and both the blueprint and the Trump plan speak in terms of a territorial system. But if you move to a territorial system, it increases the incentives to move activities and income offshore. Because if the income is not going to be subject to U.S. tax, and you put it in a low-tax jurisdiction, it will never be subject to U.S. tax. So if you move to a territorial system, you have to consider base erosion provisions. And both Democrats and Republicans agree that base erosion is a very important concern. The border adjustment provision that we will discuss in part is intended to address issues of base erosion. The question is whether the border adjustment proposal will move forward. If it does not move forward, or if it moves forward in some sort of compromise provision, then the question of base erosion provisions will continue. And so, one way or another, continuing discussion of base erosion provisions is going to be important. And if you don't have the BAT, the border adjusted tax, you have to consider other kinds of base erosion provisions. One thing that's been put on the table is perhaps a minimum tax, and we can discuss whether a minimum tax would be used, whether it would be used by Congress as a base erosion provision. Now, there has been resistance to various proposals about a minimum tax, but the minimum tax may come back as something that's necessary to address base erosion. So the international tax system and base erosion is a critical issue in tax reform. The next critical issue is the treatment of pass-throughs. The Trump administration proposes a 15% rate on pass-through income. The blueprint has a 25% rate on pass-through income. There are many, many issues around the treatment of income from pass-throughs that perhaps we'll have the opportunity to discuss. But exactly how a tax system would work with a special rate for pass-throughs and a different rate on compensation income is a challenge that needs to be addressed. Transition rules, that's a very important issue. Transition rules are going to be necessary moving from the old system to the new system. For example, if you have denial of interest deductions, well, how do you apply that to old debt? If you have expensing, how do you apply that to items that you've been depreciating before the new system is put in place? The more transition you have, the less economic benefit that you get from tax reform. One issue that hasn't been discussed of late is the IRS transformation. If you look in the blueprint, there is discussion about transforming the IRS to a customer service organization, a service-first view. Now, there have been no details about a potential IRS transformation. It's something that will have to be discussed further. One issue of particular concern is the spending side. About 5 years ago, there was a lot of discussion about coupling tax reform with entitlement reform and needing to deal with both sides of the ledger. In our country, we take in revenues and we spend monies. And the question is, well, what about the budget deficit? What about spending issues? Obviously, with the baby boomers retiring, the needs for Social Security and health care are only going to increase. So as we consider tax reform, it's necessary to keep in mind the increasing pressure we are going to have on spending in this country, particularly mandatory spending. The percentage of mandatory spending in our budget continues to increase, and it's above 60% at the present time. The question is whether tax reform is going to be coupled with dealing with entitlement spending. Just a few final points. How are other countries going to react to U.S. tax reform? There has been discussion about the border adjustment tax that other countries might respond to any provision that we might do having to do with border adjustments, that there might be a WTO challenge. And independent of a WTO challenge, how generally are foreign countries going to react to our tax reform? Remember, whatever we do here in the United States, we do not do in isolation. And increasingly so in this global economy, we have to understand that we are not an island here in the United States. And so whatever we do will have effects overseas, other countries, and other countries will react. Another area, not just that what we do for federal tax reform affects foreign countries, state and local taxation. State and local taxation is extremely important, and federal tax reform will have implications for that. Financial accounting. What effect will tax reform have on financial accounting? One might not think that's particularly important, that you shouldn't have the tail wag the dog. On the other hand, which is the dog and which is the tail? It's a very important issue, financial accounting. Just as a matter of experience, if you look back to 2004 for the manufacturing deduction under Section 199, that originally was proposed to be a corporate tax rate reduction. But one of the issues that was raised was its effect for financial accounting purposes, and it was turned into a deduction. So that was one of the reasons for the formation of Section 199 in the form that it was finally enacted. So financial accounting is a very important issue. Then process. What's the process going to be? Well, we have the blueprint, we have the administration proposal. There's been a lot of talk about now the administration and the House and or the Senate together behind the scenes trying to work out a consensus approach to move forward before releasing a bill. So in the coming weeks, we would anticipate discussions between the administration and particularly the House Ways and Means Committee and perhaps with the Senate to try to reach consensus, because right now all we have are a couple of frameworks to move forward before releasing a bill. And finally, timing. We've discussed briefly timing. We have the health care bill, and we have so many other things happening in our political scene at the current time. The question is, what is the timing going to be? Now, I'm sure the Republicans are extremely eager to move past health care and to get that done by the August recess. That would be the best schedule, and that would leave the fall to move forward after the August recess to move forward on tax reform. So just a brief introduction to some of the issues that are raised by tax reform. And with that, I'm going to turn it over to Peter.